Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, March 12th. Okay, we are looking at a volatile start to the end of the trading for this week. It's 6:20 as I'm starting the video. Quick look at futures. Large cap ES off 0.5%. Small caps are flat, while NQ NASDAQ futures are down 1.5%, but they have been down as much as nearly almost 2% this morning as I was waking up. So and also looking at TLT, the bond ETF, the bond vigilantes are back out again with TLT down. It was down almost $2 when I got up. Now it's down about $1.70, something like that. So obviously TLT down means rates ticking up, which means pressure on the high valuation technology names. And we've been seeing this dynamic play out over the last couple of weeks. So let's get into the chart, and I'll point out a few of the key levels that we need to watch as we close the week. So on the SPY daily, breaking out to new highs. New highs you got to buy. That's an old adage, or at least one that I subscribe to. There's nothing bearish about an all-time high. So the large caps look good. Now, does that mean, we're out of the woods? No, not by any means. It just means that, we're on a nice upward trajectory. Price is above all the moving averages by a large margin. We've taken out a prior high. We have a PPO reset with a bull cross, and RSI driving off of support at 50 and driving higher. So, that's what you want to see. What would concern me is not being able to hold this 392.50 on a closing basis today. That would, put this breakout, make it look a little suspect. But, larger scope of things, the pressure has not been on SPY. It's been on the Qs. And you can see here, this big bounce off of the 50, up to this level. That's a bullish look. I think we're going to have to ride out any little turbulence we may see that follows the Qs and just watch it. But I think SPY, at least at this point, is on firm footing. Let's look at the 2-hour. Here was your breakout, 392.50. We did have a gap up yesterday, and so we'll have to watch that gap entry. I have the levels marked on the 30-minute chart. We'll see in a minute. But so we had the breakout. We've got this level 392.50. I think we can key off of today. I think as long as we hold that, things are secure. Now, if we dip down into the gap, of course, then that favors a gap fill, which may happen today. Gaps get filled, so we'll have to see. We have had 3 days of gap ups, and none of which have been filled yet. So, we're just going to have to see. But I think on a longer term basis, going off the daily charts, I would be looking for long entries on SPY, not places to short. And that's strategic, obviously tactical. If you're an active trader and you see a gap entry, that's a short to take with a stop just above and then looking for that gap to fill. Here's the 30-minute chart. You can see here the gap is at 391.74, if we were to lose this 393.50 here in the morning, which it looks like we're going to open lower, your first real test is going to be at 391.74, and then you've got let's see, roughly a $2 gap to fill right here down to 389.58. But on that gap fill, I would be looking to buy that if that in fact is what plays out. Now moving on to the Qs. Remember that we had been focused on the declining 20 EMA and 50 EMA right here in blue and green on my moving averages. And yesterday with that big move, price had reclaimed it. So I mean that, and held it at the close, which is really the only germane thing to look at on a daily chart is where does price close at the end of the day, and it held those levels. So on the face of it, that is a bullish move. But now, this morning, down, 1.5% to 2%, we're back down. We're back down in the 311, 312 range on the Qs. And, if that were to hold to close the week, down below 315, down in the 313s and the 312s and the 311s, that makes this move yesterday look like a big head fake, because then you'd be, pinned below the 50 again after this surge with, rising rates back down here. So it's just a lot of volatility. It would be just like the market to, have every technician around like me, saying, yay, we took out the 50, we took out the 20, the coast is clear, the market stabilized, and then they pull the rug right after everybody, thinks the coast is clear, having secured these moving averages again, recaptured them. So it's going to be real interesting today to see how they close the week. And remember, the most important 2 hours of trading is between 2 and 4 o'clock on a Friday. Why? It speaks to risk appetite heading into the weekend. If, they pull the rug in the morning, down 1.7%, and then the bulls come in today and gobble that up and finish strong, then that speaks to people wanting to be risk on. If price languishes today and just, waffles around being down, and then they sell it into the close on a Friday afternoon, then that speaks to, more risk off heading into the weekend. Here's a 2 hour, and we had dropped in these fib retracement levels here in black, or this real dark brown. And price had popped above this 50% retrace, but is back down into this gap here this morning, which was the gap up yesterday. So we had a gap up yesterday, and then we're going to have a gap down this morning. If that, holds, we're still 3 hours from the New York Open. So we'll have to just see how the pre-market handles it. But remember, when you've got an overnight plunge like this, and really in general all the time, mark your pre-market low, because whatever bounce they do, between now and the open, chances are they come back to that pre-market low just for a double check. And so don't be surprised if even if they bounce it up heading into 9:30, that in the regular session they don't come back and want to re-verify that overnight low to make sure it was actually secure. So always keep that in the back of your mind in your typical playbook scenario of things these guys like to do. So on this 2-hour chart, you've got to watch this opening gap from yesterday, and you can see that the low, or the closing low from the other day, what was that, Wednesday, was 310.88, and we're not far from that now. So, and remember, the gap fills only count during the regular session. So if price comes down here, that's not a gap fill, that's just another bigger gap. So your filling of the gaps is only during the regular session. Here's the 30-minute chart, and you can see the various levels we've got in here. So this morning, key off of this 314.85 and this 310.88, and then a really big support level, at least on my charts, is 310. You lose 310 on a Friday afternoon, then that opens up a test of the top of this gap here at 307. It's not a prediction. I'm just saying 310 is an important level to hold for any chance of a recovery today, because you can see here resistance, support. You don't want to lose 310, or else then this gap down here comes back into play. IWM remains very strong, knocking out the highs. Got a nice bull cross going after a PPO reset on the daily, and really RSI never moved into the bearish regime. So IWM remains a stalwart of strength. We've had 3 gap ups in a row. What was that? Tuesday, Wednesday, and Thursday. So as long as it holds 230 in this gap, I think IWM is in great shape. Here are the gap levels that I've got filled in. I've got this rising channel here of price. Yesterday we had talked about the levels where you could buy, and it's been a little tough, but yesterday you could we had talked about 229, and there was an opportunity yesterday in the first 20, 30 minutes where there was a reach back candle to 229. That would have been a nice place to buy. Also at 230, could have bought there, and then you got a nice finish up to 232. And like I said, it's flat this morning. So this, interest rate turbulence has not infected IWM at all, and even SPY to a lesser degree than QQQ. So with these $1,400 in stimmy checks coming in the next 7 to 10 days, maybe even starting Monday, there's going to be a lot of money floating around out there. And there's been some surveys published or taken in recent days. What do you plan to do with your money? And the vast majority say spend it. Now, whether they spend it on call options or spend it on book and travel or whatever it is, a lot of these reopening names are going to be seeing some boosted activity and boosted economic output with all this money hitting the system. So I expect IWM to remain an outperformer. Facebook had a phenomenal day yesterday, and if you were on top of it, there was some excellent active trading opportunities. You had a gap up, but then we had 268 marked as a key level, and once you took out the prior high from the other day at 268, and you could have bought there, you could have bought 272, in any of those places, you had a nice trade into 276, which we had as resistance all along. It backed off of that. Now, of course, this morning they're pulling the rug on it, and it's down $3 or $4 from yesterday's close. So today, depending on where we open, if we were to open all the way back down by 268, or come there at any point in the day, but hold this gap, I think you can buy 268 because price has broken out, and if it comes back to this 268 pivot and holds, I think you've got an objective long there against the gap, and then see where it goes from there. But a very strong move yesterday. Apple, much less impressive. I am not a buyer of Apple. If you want to play around with it on a tactical basis during the day, long or short, that's fine. But when it was up 1.65%, but I don't see anything going on really bullish until at the very least 123 gets taken out, and then there's a lot of wood to chop overhead as you've got this downtrend resistance at 125 coming in, and then you've got lateral resistance at 127 coming in. So be cautious getting all bulled up on Apple unless you got an extended time frame. In trading, time frame is everything, and if you've got an extended time frame and you're bullish on Apple and don't mind sitting on it for a while, that's fine. That's different though than swing trading or active trading. You're more of an investor at that point. But as far as like a long swing goes, maybe 125. I'd say more like 127 is where I'd want to take a shot long and then look for 134 up here. I'd be much more inclined to do that. But this to me just looks like a bounce within a downtrend, and nothing I want to really go after in a hard way. Tesla managed to gap up yesterday and hold those gains up towards 700. But now, the last time I checked pre-market before the video was set to open right at 670, and I think that's going to remain a key pivot for a while because it's just a central point on the chart. You can see here support, 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 fail, resistance, breakout, support, and now set to open back at 670, support again. So if that were to let go, then a path would be opened up for a come back to 620. So if you're involved in Tesla, I think 670 is your line. Microsoft had a really nice day yesterday. Had a gap up, was able to recapture this 235, was able to take out this 237, and then made a run to the gap where it was rejected. So there were some good active trading opportunities yesterday in Microsoft because it opened, or I shouldn't say, it opened below 235. It broke above. I was watching this on the 5-minute chart. It broke above and then came back below 235. But then when it recaptured, that was your long trigger, and you could have bought at 235. You could have even bought at 237 on the recapture of this high and gotten $1.50, $2 out of it. But 235 was the real pivot. Now, of course, this morning we're back down towards 235. So on the gap down, at least in the pre-market, we're back down towards 235. So even though I've got this drawn at 237, 235 is your main pivot, depending on, this pre-market open. So if you were to get a chance to buy at 235 on a gap down and it holds, that's a good entry location if you're bullish on Microsoft, looking for that to hold at 235 and then bounce. Amazon had the gap up, recaptured 3100, but failed to deliver the free 50 club for the first time in a long time. So you could have bought 3100 as it took out that level, and you got about $30 out of it. So I think going forward today, 3100 is your pivot. As long as it holds 3100, the stock stays productive. But you lose 3100, then I think you're going to come back here and probably fill this gap. And remember, this is Lottery Friday. Not saying to buy lottery tickets, but if you're so inclined and we get some kind of a runner, either to the upside or the downside, those are sometimes some lucrative shots to take, only with money that you're happy losing, because as we know, most lottery tickets end up worthless. So don't go spending a lot of money you don't have on lottery tickets. Google, right up to the top of the range. I didn't look at it pre-market, but I can only assume that it's going to, gap down to a certain level. In order to make real progress, Google has to take out 2100. Otherwise, it just remains in this chop zone of expanded volatility, going down here all the way to 2000. So we've been in a $100 range here for several weeks, with a lot of tests down at 2000 and a couple of tests up here at 2100. So those are really the levels, for a breakout above 2100 or a breakdown between 2000. Pretty much everything else in between is a lot of, intraday chop. Netflix had a big reach up to 530, which failed. Had the gap up. I think as long as it holds 517.50, I think the bulls are okay and can look for another push up towards 525, 530. But I didn't look at it pre-market. I can only assume that it's come back in the pre-market. So I would key off of this 517.50 as a pivot point. Quick look at TLT. As I mentioned, in the pre-market we were down like $1.75, and we were down here below 138. Remember, we had this downtrend. Now we have been consolidating in this flat bear flag between 138 and 141. When we tagged this low here at 136, we bounced up, and then we had a big down move, then a reactionary up move. These are the outliers, 143 and 136. I mean, you can kind of see that doesn't really fit in with the chart. So now between 141 and 138, we've got this bear flag consolidation zone. And from technical analysis principles, if you take this leg down from 154 down to 138, that's your first leg down. Here's your bear flag. And then if you were to take a measured move, extend the length here from 154 to 138 and extend it down, you can see that on a break of 138, and especially a break of 136, there's a lot of running room down into the high 120s on that second leg down, and that's when these yields would really be taken off. And really what would have to happen there is you'd have to see the 10-year yields, pop above 160, pop above 165 and really pick up some momentum. And the thing is, we could back this chart out. There's not a lot of people home down here below 136. Not a lot of natural buyers there. And I think once that freight train, if it does get going below 136, it could move really fast. And we have an FOMC meeting next week. And, God knows what Jerome Powell might say or do. We've also got a couple of more big bond auctions next week. The big auctions this week didn't go particularly well, but there weren't big ramifications as far as the yield goes. So we're just going to have to watch it. I mean, if Jerome Powell next week says, you know what, I'm not worried at all. This is the reopening. We expect higher rates through increased economic activity, blah, 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 with no hints of yield control or anything like that. Who knows where it goes? I'm not a big yield expert, but just from a technical standpoint on the charts, this is the first leg down, and this is a bear flag. So they've got to hold the line at 136, or things could get ugly very quickly. These were a couple trade ideas if you missed them from yesterday. 3M, diversified industrial. I like 3M on a breakout above 185 into blue sky country. This has been grinding higher. I think 185 is clearly resistance, and if it can pop that, I want to take that long for a move up towards 200. And then XPEL is in the consumer discretionary auto parts sector. We had this, it's been on a nice rise, but then in a 3-month consolidation, which I really like. And yesterday afternoon, I sent this out on a breakout above 60. I like it long. I did end up getting long myself with April 65 calls. So we'll see where that goes. On a measured move basis, the trading range was $12 wide from 147.50 up to 60. So my measured move target is 72.50. So we'll see where that takes us. If you want to get in on that or already have, keep your stop just below 60, and then let's keep our fingers and toes crossed that XPEL can make a push. And just as a reminder, that big move yesterday was on the heels of their earnings call, which was yesterday before the market. So we don't have any earnings to worry about going forward. So we can afford to stay in this trade. And notice the big reset on PPO, which I really like. During this consolidation, you get the gentle pullback in PPO, and then you get a bull cross right at the zero line. That's a very bullish structure. And so I really like this setup. So anyways, let's see where that goes. Okay, let's do a quick wrap up. The bond vigilantes are out again this morning. We have to really be on guard that QQQ, that we didn't get head faked on the break above the 20 and 50 EMAs yesterday. That would be just like the market to trap a lot of people on that technical move. So let's watch that. Watch bond yields. It's going to be affecting the Qs the most. IWM has been a stalwart of strength as people rotate from technology, that money, into cyclicals and value. And SPY has been strong as well. I mean, both are at new highs, and that can only be bullish. So let's watch that today. Watch your fat man stocks, your Facebooks, Apples, Amazons, Googles. They're going to probably trade with technology. So let's watch how we trade into the weekend. Is it a risk on feel in the afternoon today at the end of the week? Or are people all of a sudden getting gun shy and cautious on a Friday afternoon? That's something I'm going to be watching very closely, as I do every Friday afternoon. And I suggest that you do the same. If you're new here and you like the analysis and you find it helpful, hit the subscribe button and the alarm bell. I'd really appreciate it. Be glad to have you on board. Over in the show notes are places where you can link to the blog site and to register for my content. We've had a lot of new people lately, and that's great to expand our audience and our community. If you register for the content, you'll get an invite to the trading room. And hey, if you're a longtime listener, I really appreciate your patronage. Do me a favor and pass it along to somebody that you know in your trading group that might benefit from the analysis and help them in their trading. That would be great as well. So have a good day of trading. Let's see how we wrap up the week and get off to a good, strong close to the week in your trading. And we will talk to you next time. This has been Chris Buss with Traders Profit Compass. Talk to you soon.